Joshi, who is the chemical industry expert, joining us on the show. Hi Ajay, morning. Great to be speaking with you. And Ajay, just yesterday we had the Tata Chemical earnings, when while we were chatting with the management, they highlighted the fact that the UK and US deal is rather very positive for the chemical industry as a whole, and along with that they were also mentioning that because of some of the plant shutdowns in various geographies, the outlook for the Indian chemical players is now boding very well. Help us with your view, what's really happening within the chemical space right now?
Yeah, I think what happened with Tata Chemicals, their soda ash prices remained very firm in the last quarter. That resulted in very good growth for the company overall. And company has assets in the US locally. They have manufacturing facility in the US that also bolstered company's growth there. But again, I would remain cautious in such businesses because these are cyclical businesses. If you had competition plant shut down, that time customers would come to you. But once competition is back into the market, customers would have plenty of options. So businesses like Tata Chemical, which are in the chlor-alkali space, they are cyclical in nature. 2 or 3 quarters, they do not make money. And then suddenly on the fourth quarter, they make money. So on commodity-like businesses such as Tata Chemical, this would continue to pan out. Even current quarter would be better for them. But the next 2 quarters, we would have again supply back into the market from China and other countries. So then we would further see prices falling down. But overall, for the chemical space, the good thing that has happened is the agrochemical sector has finally bottomed out. And globally, we are seeing significant price increases in agrochemicals. Even agrochemicals coming from China, we are seeing 5 to 10% price increase in the last 2-3 weeks. So overall, very good sentiments for Indian chemical companies, both in local sales as well as in the export markets.
Absolutely, Ajay. Good morning. While agrochemical, while we talk about the fertilizer space also, very strong numbers in Q1 were reported both for fertilizer as well as agrochemical players, of course, due to the early onset and strong showing numbers. You did touch base agrochemicals, but also give your views on fertilizer and which stocks are expected to be in the upcycle, and are there any scripts which one needs to avoid?
See, fertilizer space also in the last quarter, a lot of front loading had taken place because everyone was worried what kind of tariffs India is going to get. So companies pushed a lot, even customers took upon a lot of inventory in the export market. But with the India-China tensions, fertilizer segment is now poised for good growth. We are seeing a lot of capex, lot of new manufacturing coming in the fertilizer segment in India. So companies like Coromandel, companies like Paradeep Phosphate, these would be the key beneficiary. Apart from that, Chambal Fertilizer, Rashtriya Chemical Fertilizer, these will be some good companies to keep in your radar because they are expanding, they are investing heavily into new manufacturing facilities. They are making in India for India, as well as they are targeting the export market. One particular company, Coromandel, because apart from being a fertilizer company, they are now also an agrochemical company because they have acquired NACL. So fertilizer meeting agrochemical would be a very strong cocktail because they would be giving everything to their end customers now, both agrochemicals as well as fertilizers to the farmers. So Coromandel, Paradeep Phosphate would be two very high growth companies, and this year we can see very strong business for them.
All right, but along with that, Ajay, inventory issue was one of the key factors because of which a lot of these chemical companies were not able to perform that very well. And with respect to this particular earning, there are some hopes that this issue will at least subside. What's your overall sense that how the companies are now geared up to move apart or move forward with respect to this issue?
See, the inventory issue was prevalent in the agrochemical segment for last 1.5 years. We were seeing excessive dumping from China in export markets like Latin America, Africa, as well as in the European market. But that has gotten over. We are seeing very good price increase from China, agrochemicals like glyphosate, glufosinate, CTPR, where Indian companies like UPL, Sharda Cropchem are active. We are seeing 5 to 10% price increases from China. UPL, one particular company, has also increased its prices in China. They sell one agrochemical called Mancozeb in China. there also they have increased the prices by 4 to 5%. So globally, we are seeing significant price increases. Fresh demands are pouring in from Latin America, from the European market, from the African market. So the growth story for agrochemical, even in my last two interviews, I had pressed upon this, that agrochemical sector would be the front runner within the chemical space with regard to the Indian chemical sector. So yeah, the inventory issue is now over. We can see continuous growth quarter after quarter for Indian agrochemical companies.
Ajay, the fragrance and flavor industry is a vital and rapidly growing sub-segment while we talk about the chemical basket. Who are the clear winners in fragrances and flavors industry for chemicals? And as the street believes, growth in this segment and a good margin setup as well.
In the flavor and fragrance, we have companies like Privi Specialty, we have companies like SH Kelkar. Now, why these companies are growing very fast? Because Europe happens to be one of their end markets. And in Europe, we only have three large flavor and fragrance players, Givaudan, Firmenich, and one more. So Givaudan and Firmenich both outsource their manufacturing to these companies in India, to Privi Specialty as well as SH Kelkar, which was previously called Keva. So they are getting a lot of outsourcing. They are getting a lot of contract manufacturing business from their European principals. So this is fueling their growth. Overall, also the flavor and fragrance segment in developing economies like India, Brazil, as well as China, this sector is growing very fast with higher disposable income, with young people spending more on personal care goods. So this sector is also another high growth sector apart from agrochemical, and Privi and SH Kelkar are getting the most benefit out of this.
All right, but Ajay, you did talk about the pricing power getting back within the agrochemical space, wherein 5 to 10% increase is likely. But apart from that, within the specialty chemical basket, any such pocket where you believe that the pricing power can be through and a significant jump up is what one can expect?
I think the personal care chemicals space, I'm seeing that there we might see a price surge and stabilization of pricing. Last year was volatile for companies like Rosari, companies like Galaxy Fine Organics, because raw material price fluctuation as well as end product price fluctuations were there. But this year, I see stabilization in the pricing, both from the raw material side as well as the downstream demand from the FMCG sector has also rebounded. So personal care chemical is another sweet spot with regard to Indian chemical sector.
Ajay, talking about the overall demand and the pricing scenario and connecting it with the global developments which are happening on a constant basis post EU and US deal, is there clarity on revival of demand, or what does the overall demand picture for the domestic chemical players look like?
See, demand is strong in the Indian market. So one, companies who are catering to Indian demand, who are in Make in India import substitution theme-based company, they are getting the most benefit. So agrochemical companies which are selling to the Indian market, but globally, with the US and European Union trade deal, clearly, US is a big winner, and European Union, apart from tariffs, they have been suffering from increased cost of production post the Russia-Ukraine conflict, because they are not getting the cheaper feedstock from Russia, whether it is natural gas or crude oil, to make those chemicals. So Europe, as a hub for manufacturing chemical, would continue to face decline in manufacturing activities, which is a good news for India, because they would outsource more and more to India, whether it is agro, whether it is flavor and fragrance. So with the trade deal between US and EU, we would see increased outsourcing of chemical manufacturing to the Indian players. So in a nutshell, it is going to play out very well for Indian companies. But US-India trade deal, we still need to remain vigilant and see how it plays out.
Indeed, Ajay, that indeed is testing the patience as well. But so good having you, Ajay, on the show. Thank you so much for taking the time out and speaking with us. So definitely the chemical